Make sure you're subscribed to the YouTube channel and turn on the notifications. And please leave comments, not in the chat right now if you're watching this live, but if you're watching this later on, or even if you're watching it live, leave actual comments on the videos of things you would like to see more, or things maybe you would like to see less of, because we definitely listen, and I like interacting with you guys. So leave the comments. It definitely helps, guys, trying to make this better for everybody. Guys, as I say every week, Cobra Trading is hands down the best broker out there. I've used them all. I still have accounts with a ton of brokers. Nobody has the kind of customer service you're going to get from these guys, as well as the pricing and the locate availability. Especially if you follow me, a lot of people that follow me are probably short bias, small cap traders. If you guys like that kind of thing, the locates and the fees are phenomenal at Cobra. So there's a link in the description. You can get 25% off your, actually it's even more now, than it's more than 25% off your commissions, and you get 1 month free of the platform. Spike Heat, guys, if you don't know about Spike Heat, you better learn. These guys are hands down, nobody touches them as far as the ability to pull historical stock data in order to backtest a theory you may have about a certain setup and understand whether or not you have a statistical edge. And honestly, I think a lot of people think they have an edge, but haven't fleshed it out with the data. And if you haven't done that yet, you're doing a disservice. These guys make it easier than it's ever been. It used to be something a lot of us did manually, and I'm telling you from experience, doing it manually is no fun. Spike Heat makes this so much easier. So check those guys out. Scripts to Trade, these guys make indicators for Thinkorswim, TradingView. Like for instance, they make the volume forecast indicator. They're releasing it right now where it doesn't have to be just for stocks that have a pre-market gap, which makes this even better. If you follow me for any amount of time, hopefully you understand how much I care about volume, and how volume is such a large factor in my decision-making process a lot of times. These guys have a ton of other indicators, a ton of other products, and they can create custom scripts for you, whether you're on TradingView or Thinkorswim, and they are actually developing scripts for other platforms as well now. So check those guys out. And then quickly, here's your earnings list for the week. Lots of big names. We are well into the earnings season now, so after a few more weeks of some big names that have yet to report, then we will start to taper off. But make sure you guys are familiar with the names that are coming out this week, because you just do not want to be blindsided by something. You guys really should, spend the time to know who reports every morning and every day after the bell rings, okay? And remember, I'm not going to cover earnings names. Even if I talk about a name that reports earnings during the week, the idea is not for earnings, it's prior to it, right? And it's typically for day trades. I'm not gonna be trying to put people into swing positions heading into numbers. Hopefully you guys understand the risks that are associated with something like that. And make sure you guys familiarize yourself. If you guys don't know where to find this stuff, earningswhispers.com, or you can just follow Earnings Whispers on Twitter, guys. Hopefully you guys know how to use your tools. So real fast, we'll talk about the topic this week, and then we'll get into the ideas. So I wanted to talk briefly about the importance of putting some effort into figuring out what works for you, and then focusing on that and staying with it, instead of trying something and seeing other people doing something else and being like, I think I'm going to go try that, right? And this can be everything from just an indicator you use on your charts to a whole strategy, right? The concept applies across all those things. You need to figure out something that works and then stick with it. Stop with this strategy hopping BS. Is it important to learn new strategies? Yes, but can we acknowledge the fact that let's just master one first, right? I think it was Bruce Lee said, I fear not the man who's practiced 10,000 kicks, but the man who's practiced one kick 10,000 times, right? It's this same concept. Focus your energy on something that you can master and get good at, and then grow. But stop doing this crap where like it doesn't work for a week and you're just like, you see other, and this is probably partially due to following people on Twitter or being on social media and seeing people post like, whatever strategy you trade might not work today, and you see someone else on Twitter like, man, I had a banger day. They post of course they always post a P&L with it. I'll save that topic for another day, but and then you go, oh, what I'm doing is not working. What this dude's doing is working. I better run and figure out what it is they're doing, right? And you're just like a dog chasing your tail. Focus on something and just stick with it. And like I said, it doesn't just apply to strategies, but everything you do. Whatever it is you're doing, stick with it and at least give it enough time to collect data on it and to see if it's actually something that needs to be ditched because it's not working, or if it's just something that may be out of favor for a week or so, and then the market comes back to being favorable for that. And like I said, not just strategies but indicators, and anything else that has to do with your process. Stick with it, give it time, because sometimes things don't work. Like, I can't tell you how many times somebody trades a setup that has a certain win rate associated with it, and the thing is that we don't get to choose. Let's say it's a 70% win rate, which to me, I don't trade anything near that. I'm way on the other end of the spectrum, right? But that's neither here nor there. Let's say it's a 70% win rate, so 7 out of 10 trades work on average, but you don't get to choose the sequence. You don't get to choose like, oh, it's gonna just be one loss every 4 trades or something, right? It doesn't work that way. You may end up with 7 or 8 in a row that just don't work. And if you think that it just needs to be like 7 out of 10 work, and then sprinkled in there are 3 losses, and all of a sudden you get 4 or 5 in a row that don't work, you can't just assume that, oh, this strategy's busted, I need to go find something else. No. You got to see it through and give it time. And the only way to actually measure it is to be disciplined and stick to it. Adhere to your rules. Make sure that you're following it to a T. So when something does stop working, you at least know that you're doing everything you're supposed to the right way. And then we can start to kind of dig deep, peel the onion layers back, and see what it is that's causing this to not work at the moment, right? But that's another big issue, is traders oftentimes slightly deviate here and there, break a rule here and there, and then before you know it, like, you're looking at your results and they're not what you think they should be, but you have to realize that they're not indicative of your strategy because you're not actually trading that strategy. You're deviating. Stick to your stuff. Stop chasing the shiny objects. Stop looking on social media and saying, oh my God, trader X made this much on a day where I just couldn't get anything to work, right? That happens. Everybody goes through these cycles where it feels like it's not working. Stick it out as long as you know that what you do works. And even if you don't, right, you still cannot strategy hop, guys. So I just wanted to spend a little bit of time this weekend and try to make sure that we reaffirm that in the back of our minds, that screw what everyone else is doing. Focus on you, zero in on what works well for you, and block out the noise and stick to it. No more strategy hopping, guys. So that's it for the topic for the week. Gonna hit the disclaimer real quick. Guys, neither I nor True Trader or any of its affiliates are registered as security broker dealers. I'm not a licensed financial advisor. Everything I talk about today is strictly for entertainment purposes. Nothing I talk about is a solicitation to buy or sell a stock. So, as always, the broader market. And boy, oh boy, last week was nuts, right? And hopefully you guys got a lot out of last week's Sunday prep. And we touched on a lot of this stuff, right? So we always prepare for every scenario, right? And one of the scenarios we talked about was losing this low from here, and we did. And remember, I said even if we lose that, I think it's not just going to go straight off a cliff. It most likely is going to get one of those big bear market rallies. Now, when I say bear market rally, doesn't mean we're in a bear market, even though I personally feel like we are at the onset of one. And again, remember, I don't know if it's going to be a 20% correction or a 50% correction. It doesn't really matter to me, right? All I need to know is how to spot a bottoming pattern in a market based on market structure, and I'll be okay, right? I can always make my if-then statements. I know how to set my risk. And so again, the reason I reiterate that, guys, is to drive home the fact that this is not about predicting. It's about creating contingency plans and then acting accordingly, reacting, right? So you don't have to have a crystal ball. You don't have to know what the market's going to do. You just say, okay, there's these scenarios that could happen, and here's what I will do if they start to play out. And so we had a really strong bounce, especially on, when you look at this chart, this is a weekly chart, right? We had a really strong bounce on the weekly candle. Now, on the weekly chart, we still haven't got a close under this level. You can take that with a grain of salt, because as soon as you drill down a little closer to the daily chart, you realize, yeah, there some things really did get broken on the daily time frame. Let's actually just take a look real quick. And actually, you know what? To be honest with you, we only had one day on the daily chart that closed under this level, which was the Wednesday, right? And then Thursday was the big gap down, but the gap down was bought back up viciously, right? And then the very next day even had a second day continuation of that up move. Now, when we get into the Nasdaq, you will hopefully see that difference, okay? Because pay attention to what I just said. We never really stayed below this level for too long. On the daily chart, we got one day that closed below, and then it was right back above, right? The Nasdaq's different, and we'll point that out. But I still think that when you zoom out and start looking at things, this is making lower highs and lower lows. Even if we start to get back above certain levels, I still feel the bulls have a lot of work cut out for them to one of two things. Either build a base over the course of, whoever knows how, we don't know how long a base will be built, but if they can build a base, whether it be 2 weeks, 3 weeks, 2 months, 3 months, right? Get a nice base built and start to like digest the move, and then maybe get a push from there. That's one thing they could do. Or if they start breaking above certain levels, then the next thing that they need to do is get back to all-time highs. And until then, every push back up into resistance will be seen as, from my point of view, as the possibility of putting in a bigger lower high. And remember, Monday is the last day of February, but once February is over, which Tuesday will be the first day of the March candle, you know, we didn't quite get back to the monthly 20. I kind of feel like you could say it was close enough, but you know, if we can break February's highs and still not get back to all-time highs, then I feel like a breach of February's lows really doesn't, you know, it really starts to get the bulls in more of a panic. Even though, you know, it's going to run right into the monthly 20. But when you start to look at things like the weekly chart, you'll realize there's probably an air pocket there. If we push up and then lose Friday's low a day, which would be February's lows, right? Or not, I'm sorry, not Friday, Thursday. Thursday's low a day was February's lows. So if we get below that after making an attempt to go higher, you know, there's quite the air pocket there. Who knows where it wants to go? Again, not about a crystal ball, but there's a lot of levels below that we may want to test. And again, if you only long stocks, then, you know, the way you kind of use this information is, you know, that you should be hands off and maybe just wait till the market gives you a signal that bulls are ready to, you know, build a level of support and make some pushes. You know, there's no reason to pick a bottom of a market that's coming down in a downtrend. You don't need to pick a bottom. The same way the bull or the bears over the last decade look like idiots trying to pick a top in over a decade-long bull market, right? That there's a trail of dead bodies of bears this whole way up, right? That kept calling tops. It's not about calling a top. It's about riding the trend until the trend reverses, and the trend has reversed. So at this point, I'm not trying to find a bottom. I'm just trying to see, do pushes still make lower highs, and is there a way to join trend to the downside until something changes? So remember what we did last week was I just showed you guys how I set alerts, right? And, you know, I'm really just going to kind of do that again real quick because, one, we don't know. So I guess we definitely need to talk about this, right? If I don't talk about the macro environment right now, everyone's going to kill me. Yes, there is a crazy macro situation unfolding right before everyone's eyes, and that is obviously the Russia-Ukraine, I guess, can we call it a war already? Because it feels like it's a war, right? And, you know, there's been a lot of stuff that developed over the weekend that is going to cause some big moves in certain things, like the Russian currency is getting destroyed, right? And there's what looks like citizens are making runs on the bank. A lot of that's going to have spillover, right? A lot of these kinds of things spill over into other markets. So where we open tomorrow morning is probably going to be pretty telling. It's going to be interesting. I'm going to be watching to see what the futures do when the futures open, even though I take that with a grain of salt. But you know, I could make whatever kind of guess I want and be proven completely wrong at this point about how we open. So at this point, I think the most important thing to do is just identify what are the really key levels, mark them out, and then when we see where we're going to open, then we can kind of make our plans, right? We could either, you know, gap down a bit and shove up into resistance and stuff and maybe come lower. We might do something similar to last week where we gap down, flush out, get everyone to panic, and then it gets bought back up. We might gap up, spike, and fade off, you know. So we make plans for all those things, but we need to see where we're opening first. So the real important thing to do is just figure out your support and resistance, guys. So as you can see all these lows here, like so many of them, right? And I'm just going to put an alert right there. And remember, I just make these good for the week. Change them from open-ended. And so actually, here's that Saturday. And I'm just going to set, oops, I forgot to title it. I put S for support, guys. So I'm just doing this live. Remember, I do this every single morning too. But since I'm doing it with you guys, I won't have to do it tomorrow morning, right? But just real quick, trying to get some, and like, so these ones that are really nearby, right? Like this 43.57 level, most likely by the time, unless the futures open and just rip, this most likely is going to get triggered tonight. This one very well may too. And that's fine, guys, right? I can always set new alerts when we wake up in the morning. Now remember, I'll set this one down here, which is kind of that line in the sand, last week's lows. I can set this one down here, but I also want another one to let me know when we break that low. And that one's different, right? I just call that, we'll just call it the rut row level like we did last time. And again, there's a difference, right? This one is letting me know, oh, this is a major level that was breached on the daily, or actually on a lot of time frames. As opposed to this one in front of it is just support. If that holds, then that may be a level to be buying flushes on certain names for a near-term bounce, right? And so obviously we have the 20-day and the 200-day both really close to each other right here. That's the white line and the green line. I definitely want to know when we push up into the underside of those. And I hope you guys do this yourself, right? I don't want you guys to just watch me do it and then not do it yourself. I want you guys to, this should be a practice of yours every single morning. And this way also, it's kind of nice because it makes it so I'm not really trying to just put out crystal clear levels for you. I'm just showing you areas of my interest, right? So you can see the 50 days come down currently at 45.50 it looks like, and there's some recent highs up in those areas as well. And I already have an alert up there. If you remember, 45.80, was it 45.86 is that trigger from the other week. And if we get above that, that may get us a burst to the upside, but that would be what gives us, as long as it doesn't happen tomorrow, if we break that level, say on Tuesday, Wednesday, Thursday, Friday, that's going to be what gives us the ability to have March's candle breach February's highs and then possibly put in a lower high on the monthly time frame. Let me just verify I'm giving you guys the right levels there, because 45.86, I just want to check it out on a monthly chart so far. The high, yep, 45.86 is the high of February so far. So like I said, as long as this doesn't happen on Monday, if that level is breached any day after Monday, that's the beginning of it's the first attempt to get higher than February's highs, and for bulls that try to take us higher. Again, I don't think they're out of the woods just because we can get over February's highs. And remember, there's all these scenarios. If we push up and don't breach February's highs and still come lower, things still start to look really ugly for the bulls. Not like they don't already. So let's move on to the Nasdaq. And remember, I did want to point out on the daily time frame here, this was that level, right? Well, actually, I had it drawn. What is this level here? 14,050, which was, just from this base that was broke here. When we pulled back to it, that was where they had this attempt to push higher. God, every scenario I look at just looks super bearish, right? Every time we come down and try to rally higher, stuff all the key levels, and roll over lower, right? This is a trend continuation to the downside. That's all it is. And so you can see there was quite a few days of closing below these levels, as opposed to the SPY, which just spent one day below it and then rallied. Again, levels are pretty much the same for me as far as, or thought process is pretty much the same for me as far as levels that I'm just going to set alerts for, and what I'm going to be looking for as far as the week unfolds. I may stop doing this live, guys. I may start just doing it ahead of time and showing you the alerts, because I feel like it kind of drags this on to the point where you guys can set your own alerts and you don't need me to show you how to do this. All you need to know is just do it, right? But again, I'm kind of freestyling things, just trying to feel out a bit of a different format how I do these Sunday preps with you guys. I want you guys to hear the thought process. I want you guys to understand what's going through my mind and why I think about things in a certain manner. So this one here is interesting, right? It's that 15,000 psychological level. I don't want to be alerted at 15K. I want to be alerted when I'm approaching 15K, right? So that's a key level for me, guys, those psychological round levels. And of course, your main moving averages, like the 20-day and the 50-day and the 200-day. They're all, like the 50-day and the 200-day are right up there, right by the annual pivot and the monthly pivot. Like that 15K level is so thick, meaning like if we get a rally up into those levels, I'm going to be very, very interested for short setups. So that's why I care about those kinds of levels. So hopefully you guys can see the levels I kind of just marked off there. Make sure that and whether or not you use the NQ or the QQQ or the NDX or SPX or the SPY or the ES, right? Like you can use whatever you want, but just do the work, guys, right? Mark your levels. And this makes it so that during the work week, when I get alerts, I don't have to be staring at SPY or the Nasdaq while things are happening. I literally can just let my alerts tell me what's happening in the broader market. That doesn't mean I don't have a SPY chart up or a QQQ chart up. I do, but I like to focus on individual names and see what's happening in sectors, and a lot of things unfold really fast at the open, and I don't want to be sitting there having to stare at the SPY. Quick water break. All right, let's get into something interesting, Bitcoin. And so why do I say it's interesting? Well, it's interesting because I haven't looked at it since the other day, and I see that we are coming in quite a bit. Now, remember, I haven't changed. This yellow circle was from last week's Sunday prep, right? Now, you'll notice we came way lower than that circle, right? Who cares? That circle could be drawn anywhere as long as it's not below this one, right? So the point I'm making here is that if this is going to turn back up, then it needs to hold this area without losing this area, right? So it needs to not lose 32,933 and 33 cents. I hate saying these long, stupid numbers. I'd rather just round it, right? Like, let's not lose 32,900, okay? That would be a level that the bulls do not want to lose, because I feel like if they do lose that, we're probably coming right down here to the 28 area. And that's another key level that really needs to hold, because you can see under 28K is quite the air pocket, right? And so, yes, I have not touched this yellow circle since last Sunday prep. And even though we may have come under it, the idea from last Sunday is still playing out right in front of our eyes. It still holds true what I said. And in fact, you know, this may be setting up for what looks like a different time frames kind of long trigger, right? So we've pulled back, we've pushed up, and we made a little higher low here so far, as long as we don't lose these lows. And so over this level here would actually be a trigger to possibly take us up to this high. So I'm just gonna put long trigger, and I will just throw it on for 1 week. I don't want that to stay there forever or whatever. And in fact, I don't want it to trigger right at the top. I want to know when we've breached that level. So I just move it up a bit, okay? So over that level, and that might get us up to these highs. But remember, these highs are the real long trigger. In fact, I need to make it a little bit higher than that. I'm going to set a trigger here, long trigger. And this is the one that if this breaches, if you get over this level, then I think maybe we actually are having a reversal from this downtrend we've been in. Let's look at it on a weekly chart. Yeah, so on a weekly chart, things become much more clear, right? So pulled back, you can see we tried to do the same thing we're doing here, back here, right? Pull back, push up, and I was thinking maybe we make a higher low here and then breach this level and go. Now there was a lot of levels above there, and you know, in hindsight, it was a beautiful bear stuff, right? Like look at what happened. We breached this trend line, and then the next push back up into the underside of it, which was also the underside of the weekly 20, stuffed, made a lower high, and then rolled lower, right? So the same thing could happen here. You know, we might end up stuffing the weekly 50 or 20, I don't know. But first things first is to get above this 45,855 level. Over that, and then we may see our first reversal that we've had in a while. And guess what it's coming off of? You see this orange line right here? That's your monthly 20. So let's look at a monthly chart real quick. So this is the first pullback to the monthly 20 since way back here in March 2020, right? So even when we had the big pullback in middle of last year, it never got back to the monthly 20. We are there now, and if a long trigger occurs from this level, very good chances that will end this little downtrend that they've been stuck in, right? And I'm not a bull or a bear when it comes to cryptos. I'm just objective, and this has been in a downtrend. Just what it is. Same thing with the SPY and the Nasdaq. I'm not a bull or a bear. I'm objective. I'm just saying whatever time frame I'm looking at, this thing is making lower highs and lower lows, or is it doing the opposite? And whichever one is the price is telling me, I'm going to go with it. I'm not going to try to be that guy that sees an alternate reality, right? So that's the broader market, guys. Let's jump into our sector analysis. Here is the sector matrix. Kind of a mixed bag. You know, you have a lot of green sectors. Obviously, the whole market made a really strong push on Thursday and Friday, right? But as always, we need to look at the ETFs to see what's really under the hood on those names. So let's check out the ETFs real quick. I'm gonna go into a daily time frame to start. We'll just go right through them all, okay? Again, so remember, there were a lot of long triggers looming last week, such as, you know, a breach of this 8350 level on the retail chart, XRT. That would have looked really bullish, but instead it was a bear flag that broke to the downside, right? So now all these pushes back up into those levels are coming right into levels of resistance now. There's, you know, you have to understand how these levels work. A lot of people see consolidation and they start buying thinking their risk is set. Okay, I'm going to stop out under those lows. This is where we're going to make a push from. But when they break to the downside, inevitably some people don't stop out. Some people just add as it goes lower, whatever. You get people stuck at levels because so much consolidation happened for a while. If it breaks to the upside, same concept, right? When it comes back and retests, that might be support because you have a lot of people that are long from that area. And so you might have a lot of people trapped in there. You also may have a lot of people that are short, position short in there. And so the next time it comes back up to that level, it acts as some resistance. So you can see we're pushing right back up into there. It's going to be right into the 20-day, right into the monthly 20 as well. And we are in a downtrend. So pops up into those levels. This looks very bearish still. Just like we said about SPY and the Nasdaq, these things have a lot of work to do on the bulls end to make it look productive. At this point, nothing they're going to do this week will change my thesis. I'm going to be bearish on a lot of these names, okay? Finance. This one's interesting, right? This is the one that's been in this channel, right? It's been stuck in this channel, and it was one of the few that still looked kind of bullish, even though we breached it, right? Now, again, we breached it, and, you know, granted, we closed outside of that channel, but we closed at highs, and then the next day they got right back into the channel. Still, though, and here's another thing. We didn't lose these lows, right? I mean, maybe we did, actually. I think it breached it by a low. What's this low? One second, can't read. This says 36.82, and this one was 36.80. So breached it by 2 cents. What's funny about that is I always use at least a 3-cent breach as what is necessary for me to consider something broke. Oftentimes I say 11 cents, right? So 2 cents is really not enough to give you conviction to say, oh, that level got broke, right? Now, what is telling is what happens next. Okay, I don't care so much about the pullback. I care about what happens after the pullback. So we've had a big bounce. Does this go into resistance here and roll back over? Because remember, this has been stuck in this little up channel for quite a while. If it can't get back up there and stay in there, then what's left to happen is this to make a lower high and come back under, and then your financial sector starts to give that really bearish look to it. Now, granted, everybody else, all its peers, all the other sectors have been bearish looking for quite a while. This one's been holding up very well in comparison. So there is that to note. Another one here, real estate, very bearish looking. Lost levels, pop right back into resistance. We'll see what happens this coming week. Again, I'm not really a big, I don't trade a lot of equities or individual names from that sector. But again, worth pointing things out. Healthcare, again, same look, right? Lost this big trend line, pushed back up into the underside of it, stuffed convincingly, came back, lost these lows here, and now we're shoving back up. You're going to see a lot of these charts where things are just ripping back up, but these rallies are right into recent levels that got breached and broke, and when we pop back into those levels, I find it hard to believe, especially when you have an emotional move into those levels, that we're going to get through them, at least on the first try. So that's why I'm so bearish on these rallies up into these levels. Materials, still into some lots of overhead up here. Nothing looking like juicy or anything. Industrial, same thing. Again, guys, a lot of these charts are going to look very similar. Now, consumer staples was the one that still looked very bullish, right? You'll remember from last week. My main thing was that most of the sectors, or most of the stocks I wanted to get long, were names from this sector, because these things were still in a very clear uptrend, still holding levels very well. And you'll notice we retested these levels, but they bounced perfectly. So I'm still thinking consumer staples looks as good as most sectors could look with the broader market looking the way it does, right? So still very impressed by the way consumer staples is working. Now, if we can't get back above this trend line here, and we do roll over and then lose Thursday's lows, then consumer staples would start to look kind of broken, right? But until that happens, I'm going to stick with the bullish thesis on this sector, okay? The consumer discretionary still making lower highs and lower lows. Communications. Now, communications was the one, remember, we said looked very oversold, and now we're getting a big bounce on it. Still, it's going to go. The bounce is going to go right into tons of resistance, right? So, even though it was oversold, you kind of got the bounce started. The only way to really play things when you get these oversold moves and then they start to rip is you kind of have to create this thesis that, okay, my if-then statement is the bottom may be in, right? And so what we say is if it flushes out and comes down towards where recent lows are, we can put a trade on risking under those lows. And if we're wrong, we just stop out and we take it. And if not, maybe the bottom is in, and then we can catch a runner. And you'll see that when we get into some of the individual names too, guys. Biotech, again, so it lost that low that we were talking about. Now, granted, it reclaimed it the same day, right? So I am still going to look at a breach of these highs up here as a pretty healthy look for a reversal signal on this very, very sold off sector, right? We've talked about this for week after week after week. This little breach down here, I'm not going to say that was significant enough to call it a lower low, because it just was from the gap down in the broader market. If you guys remember last week, you should remember how the whole market had that giant gap down, panic flush out, and just, I don't know if anything downticked after that, right? So I'm just going to say that we're still working with this level. What's the level? I'll give you guys the exact price if I can hover over it. 99.16. Over 99.16 is going to be a trigger for me on the biotech sector, and there may be some names that are worth eyeing if we can get back above that. So technology, again, just like the Nasdaq, I think this push up into some of these levels is going to offer really, really good short setups. Lots of resistance up there. There's just so many different levels to play against, and so I've got alerts set on the NQ, and this would be no different. This sector is going to follow along with the NQ very, very closely. And then, of course, energy and oil are still looking strong. One of the funny things I kind of like, it was individual names, oil and energy names, that made me realize this over the weekend. But that was just every single time, even though this is such a bullish chart long term, right? When you zoom out and look at this trend is beautiful, okay? But when you start to look at it from a daily chart, one of the funniest things ever is that every time it pushes up and you get these flags up at the highs, instead of going higher, that's when they roll over. Every time. Like push up, flag, 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 roll over. Push up, and so that's kind of what we're doing right up here, right? Flag, flag, flag. I feel like the rollover's coming. Again, there's a lot of headline risk for trying to fade oil and energy names, considering what's happening with Russia, right? So I'm going to be more hands off on the oil and energy names this week because of the headline risk, unless, let's say, something happens with the headlines that causes something to go into a crazy parabolic move. I may look to fade that move. But again, just keep that in mind when you look at names in these sectors that look strong. Usually when they look really strong is right before they roll over. And you'll, like, honestly, I'll show you the individual names real quick that had me thinking this. Let me go to the main charts. Well, that's the end of the sector analysis anyway, right? So here's some of the names that made me realize. This is APA. I think this chart looks phenomenal. I think, you just get these bases and then they go to the next level. It's like a stair stepper, right? Base, next level. But we're right up into this longer term resistance trend line, right? And I'm kind of thinking this is setting up for a big rollover. And then that was when I realized, like, every time this thing flags out up here, that's when you get the big rollover. And same with OKE, right? So I look at a lot of individual names and go, oh man, every time they look like they're perking or flagging out and looking like they're set up really bullish is when they roll over, shake everyone out, then catch a trend. And that's why I feel like for the oil and energy names, you would be doing yourself a huge favor to just look at weekly charts or monthly charts, because that's really the kind of time frame you need to stay focused and not shook out of trades or picking better entries. So that's it for the sector analysis. We did the broader market. So there's not a lot of names on my list this week, guys, but I will get into them. We'll start, like always, with the long names. Strong stocks looking for continuation. One of the themes I'm looking for this week is cybersecurity, right? With all the stuff going on with Russia and Ukraine, cybersecurity should have a bid, right? They're going to be focus point stocks. So the first one I'm looking at, and actually the only one on the list, but you could probably substitute in other names in that sector for the one I'm going to give you. But the one I like is Net. And I know, like, most people are like, Ricky, that doesn't look like a strong stock looking for continuation. I feel like this was a very strong stock, and I think it just kind of got that hype blow off before the market reversed. But it's pulled back. If you look at this, like, in terms of where this pullback has been to, right? Look at this base that was built here, and now we pulled back. This is also the monthly 20. And what have we got? We've got a higher low. I mean, I could draw it for you guys. I'm sure there's one right here. The exact same setup. You see this? Same setup. Oh, am I going to be able to click this and drag it? Oh, I knew it. Let me zoom in a little. There we go. Oh, I hate when that happens. Sorry, guys. What? You know where they're going? They're on my daily chart. Watch. Go to my daily chart, and these stupid circles are going to be here. See? I don't get it, but I'll put it here. And we'll get rid of this one, and I'll go back to my weekly chart. Will it be there? No. Dude, it's something to do with hiding it on that time frame. There we go. So here you go. On the weekly chart, you guys can see this. This looks very bullish. If we get above 120, and that's what this says, right? It says daily long trigger, that alert up there, and that's over 123.12. So this is what gives me this bullish thesis on this setup that's developing. Now, I'm not recommending it for a swing trade, but personally, what I will do is I'm going to look to buy this on early weakness, Monday morning or Tuesday morning, whenever we get it. I want to use Friday's low a day and 100 as a guide, right? So you see, you've got the monthly pivot at 101.70. Friday's lows was 100.53. So I'm looking at a flush down to the psychological level, which is also a pivot. I mean, they're in that same range, right? And you can see you got a lot of price history in there. I want to see if buyers show up on a flush to 100 and this thing catches a trend, because I'm going to put something on that will allow me the ability to close out a day trade portion of it and leave a runner on to see if eventually we do break over that 123.12 level. Because if we do, then I think that this thing is probably going back to the highs. 200 is probably going to be like a very rational target for this setup. But you have to understand how to position size these kinds of things, guys. Like, I know heading into it, let's say like on your day trade, you want to take, like, let's just use round numbers just for ease of math, right? But like, let's say you want to take 1,000 shares on a day trade position. Well, knowing that I want to leave a piece on for a swing, and my swings are always size smaller because I have to give them a lot more wiggle room, right? So if you want to take 1,000 shares for a day trade, probably take 1,100 shares, and would stop the whole thing out if the day trade idea does not work, right? So yes, there's a slight bit more risk on if it just doesn't work as a day trade idea, but that gives you the ability to lock that full 1,000 shares in at whatever price target you have or wherever the stock goes, and you can leave that 100 shares on as your day trade or as your swing position. And you can use a number of different stops, but the whole purpose of using such small size on the swing portion is that you are able to give it that bigger wiggle room. And then if we break over 123.12, I think it was, right? 120. Yeah, if you get over 123.12, you have 100 shares on from 100, so you're already up 23 points. You can add dips knowing that the setup is valid, it's triggered, and you can add dips and you can still have a really good average and give yourself some breathing room to let the trade work. So that's the idea on net. I'm looking to buy it, risking Friday's lows, kind of using 100 as a guide. I believe if you kind of like, let's see here. Yeah, you can see here's Friday's lows. Obviously there's the pivots right there. 101.70 is the monthly. But you can see we had lows, even though these were after hours lows, they're still, yeah, once we zoom out a little more, you can see there's a lot of play around that 100 psychological round number. So that's kind of what I'm playing against on NET. We'll see what happens. Listen, for all we know, the market gaps down huge tomorrow, and all these long ideas are just completely scrapped, right? This thing might open at 90. I don't know. But if we were to open like 107, 108, anywhere in those, like anywhere close to where we closed on Friday, and then we get morning flush, I'm watching for buyers to step in at that round psychological level 100. Okay, so make sure you guys also understand where the market opens will greatly affect whether or not this trade is even valid. The next idea is LAC, which is another sector I think may have a bid because this is a lithium corporation or company. Lithium is a major component of batteries, and batteries are a huge thing nowadays considering oil prices are through the roof. Gas prices at the gas pump are making me drive my wife's Tesla all the time. I'm telling you guys, like, I think these lithium plays may be pretty good And you can see, like, yes, we've had a big pullback, but we put in this low here. Again, we can start looking at the weekly chart and you see the exact same thing I just showed you on the NET chart, right? Pullback, here's a low, here's a push up to make a low, a high. This is what I call an intermediate high. And then a pullback to make a higher low. And if we break over that 31.13 level, or let's see, it's 31.15. Over 31.15, this thing should be using those recent highs as your target, right? So that's, that's a 10-point gain on a $30 stock. That's like a 30% gainer, and you'll be risking under, 20, 23 or so. That's the thing. I probably wouldn't buy this. That's why the idea is to get in on a day trade and have a piece on that you leave for a swing, because you don't want to be buying this on the break of 31.15, because then you're getting about 1-to-1. If we get a flush come early Monday morning, tomorrow morning, we get a flush down to the 20-day. What do I have written down? Yeah, the 20 day is what I'm looking for. Flush to the 20-day and look for some higher lows, some way to get in where you set your risk. Now we're in with like a 27.50 average, and the ability to add over 31.15 if you leave a runner on. And then your risk, you really start to skew your risk reward in your favor if you do it that way. Obviously, when you anticipate, you have a lower win rate because you're anticipating, as opposed to waiting for some confirmation. But that's why it's a swing sized position, and you're trying to also lock in padding on the day trade portion, right? So I'm looking for 27.50, that area, for buyers to show up on an early flush. Again, depending on where the market opens, this may just be a scrapped idea. And again, I don't care if it is. That's fine with me. All right, so those are the only two names that I'm looking at come Monday morning for strong stocks looking for continuation, and it's because of their sectors and because of these looming long triggers on the higher time frames. Everything else is either bearish or an oversold reversion type trade. And honestly, when you go into FinViz, right, and you run the screener for oversold reversions, there's nothing in the 20s. Was there anything in the 30s? Yeah, okay, so, you start to get into some names where, honestly, like, I'm not in love with Dell. In fact, Dell's on my short list. I don't trade Foot Locker. It's not liquid enough. I don't like FSLY down here. I start kind of looking at these thinking, I don't really like them too much. And if you really open up the parameters a bit more to include anything that for 40, I feel like, when you start to have to really open up your parameters to see if there's anything that fits the idea, you're really kind of saying that there's nothing out there that's A+, right? You feel like you're just scrounging for ideas. That's not the way to do it, guys. I want stuff that looks obvious. So what I wanted to point out was things like Square or Facebook that were on the list last week, or maybe even the last few weeks. If you look at the weekly chart, right, you'll remember I told you guys I'm not a big fan of something that's this oversold from the weekly 20 to be shorting it, even though I did have a short on Square last week, and it worked, but you had to be good and know what you're doing in order to short that thing. And in fact, I locked in profits and stopped out the remainder because it kept holding levels and curling higher. And you can see they had a really strong close. So names like this, or Facebook, or PayPal, when you look at their weekly charts, those are some really gnarly looking reversal candles, right? And so again, remember what I said about the communication sector had the same type of thing, right? The only way to play these for me is to start with the thesis that, okay, maybe the lows are in, and if the lows are in, then the only way for me to get involved in these names without feeling like I'm chasing is to say, okay, I need to buy a flush as close to the lows as we can so that we can have, now granted, you want to make sure you understand your time frames, right? So Facebook, the low is way down here in 190. We closed at 210, right? That's a 20-point difference. I would need this thing to flush to 200, that round psychological level, for me to even start looking for higher lows and something to risk against. Or I may end up just missing the trade. Doesn't mean there won't be a lot of trades in there. Let's say this thing just flushes off the open all emotionally. Let's say we don't gap down. Let's say we open somewhere around here, and this thing just flushes 194, 195 right off the open. That's an emotional move that I know I, as well as a lot of other members over at True Trader, will probably take part in. But it's not going to be conducive to anything resembling like a swing trade, considering where you actually have to risk against if you're using the recent lows as your risk level. Yeah, what was it? It was these lows here from Thursday, down here around 188. So anything, for me personally, I feel like these names are starting to reverse. I'm not looking to short them anymore. I'm really just kind of thinking flushes where I can find support to risk against may be good long ideas, but I don't want to chase strength. Anytime you see something that's this oversold and it gets that bounce, you're going to get a lot of people that are FOMOing in. They're going to be chasing this thing, buying it, and they're going to get flushed out. So don't be that person, right? Be the person that's patient, wait for dips, wait for a trend to develop, and then try to enter on the trend and ride it. But again, if you don't understand that concept, just hands off, right? We missed the lows. And that's, obviously we can always push up higher and then roll over and go lower. That's what happens in a bear market and a downtrend correction. But for the near term, I think the lows are in, and that if we're not in already, you missed it, and you either need to wait for better prices, we need to wait for flushes, or you need to be hands off because you don't want to chase these things. You're going to get destroyed. All right, so that was all I wanted to say about the oversold reversion setups. Now we're going to get into the short setups. So I'm looking at weak stocks, looking for continuation, and again, there's a million of them I could have put on the list, but I'm going to start with INTC, Intel. You'll see it broke a very long-term downtrend. Obviously, I drew another one, and I'll show you why. So you have this trend line here that's breached. Now, price very well may want to come down here and test this much longer-term trend that goes all the way back to 2009. But for the time being, this is the trend line that broke. And what I'm thinking is that pops back into the underside of it are where we should be looking to get short in case it does want to come down to this trend line, which is going to put us right in line with these highs here, right? So a retest of that breakout area. So what I'm thinking is that we already had the pop, right, from Thursday, Friday. We're right into the 20-day. I'm looking at, what did I write down, 48.50? Yeah, 48.50 is the level where I'm looking to get short any more of an upside to the Intel name. Now, if it gaps down, I may just play a pop back into the 47.56 quarterly pivot area. There's a lot of different ways that, depending on how we open Monday morning, I may end up playing this name. But I do think that this push back up into these levels is going to end up being resistance, and we are going to roll back over. So I'm looking at Intel short at around 48.50. It's going to depend on how we open tomorrow. The next name, Dell, had earnings, got destroyed. Actually, it got destroyed before the earnings, right, because of the big gap down. And then the name had the earnings come out the next evening, and it sold off even more, right? So people were not happy with that. It bounced, but in my opinion, that bounce was just bouncing with the market, right? The whole market bounced. This did not close on highs. It closed down in the middle of the range. I think Dell's a short on a pop. I'm looking at the 200 days, my area of interest. I don't know if it's going to get there, considering when the whole market was rallying on Friday, it couldn't get there, right? Like it tried, it almost got there, but then it rolled back over and we closed around the middle of the range. I may even entertain Friday's high a day as the level to short against. It's going to depend on where we open and how it moves off the open, but I think Dell's a big short. DKS, I've talked about this one extensively. Obviously broke the trend line. You're going to notice this has happened a lot. That's what happens in bear markets. We've been in a uptrend for over a decade. All of a sudden, the whole market starts to roll over. All these names that were in these big uptrends, guess what they're doing? They're breaking major trend lines. They're making lower highs. They're making lower lows. So when they start to do this, this is where we need to start getting involved on the short the rips, not the buy the dips, right? We need to short the rips. So I am thinking that this 110 level looks extremely enticing. I want that 50-day, 20-day retest of this trend line. If for whatever reason it can't get up there and starts to make lower highs, I may join trend on the name, but I really, really want 110 on DKS. Richard's Sporting Goods. The next name on the list is BYND, another one that, I've just been so bearish on this name just in general for years now. It's just like, no, I don't think anyone eats this stuff. And the number, like, dude, every time they put out earnings, this thing is just in a perpetual downtrend, guys. So no reason for me to want to buy this thing at all. I think any pop back into the 20-day is a short. What did I write down on it? Yep, 20-day. That's what I think. And you can see, obviously, there's levels ahead of the 20-day, but I do want to let it kind of get a rally before I think it's a layup short just yet. Let's see right there. You can see these lows from this day, and then we broke and we haven't retested. So that's right where the 20 days at. I would love a rally in Beyond Meat, but it needs to be on volume too. You can see we have volume on Friday. I think everything had volume on Friday. We had volume on Thursday. They had earnings. These guys always have volume for a few days after earnings, but you can see that after the earnings kind of dissipate, it goes back into being rather illiquid. So if it's not liquid, I don't want to trade it. Just throwing that out there, guys. Last name on this list is Caterpillar. All right, so this thing had a major short trigger. I tweeted about it. You can see it on the weekly chart. You can see it on the monthly chart. Like, look at this, guys. This is just major weakness. Big pullback from highs. Long trigger. Make that lower high on the monthly chart, and then the break of these lows. So my thought process is this might come quite a bit lower, but I'm not really trying to capture that much of the move in terms of where this could go. But I wanted to look at possible ideas of where to get short, and like, I don't necessarily think the quarterly pivot is going to be where I want. Now, if it rips up into that level, I may take a quick scalp trade on it. But the real spot for me is the 20-day, because it's going to put us into a retest of this really not very long of a base, this little trend line that broke, but that is where I want to get involved. So 194 to 195-ish, hopefully it takes a day or two so that the 20-day can kind of curl down there. But I do want, you can see like when we hit the 20-day right here, that's where this reversal happened. Hit the 20-day here, reversal happened. The 20-day is my guide on a lot of stuff, guys. If you don't know that by now, you should. Actually had somebody trying to say that by the charts I post on Twitter that I obviously don't know how to use moving averages or something to that effect. And I was like, dude, maybe you just don't understand how I use them. But moving averages, especially the 20 on every single time frame, play a huge factor in my personal trading. So that's it. Other than overbought reversion setups. And again, if we go in here and just change this to overbought, right? There's nothing in the 90s, nothing in, I think there might have been one nothing in the 80s. So in the 70s, right? Again, we're really kind of stretching it here. None of these, to me, are something I want to get involved in, because I feel like I'm opening up the parameters so much just so I can find a trade. Now, there is a lot of stocks that have had rallies right into resistance, but nothing in the overbought reversion category for me. I do want to say there are some stocks that are trying to build some bases that I've been looking at. Like I mentioned Kraft Heinz last week. I think this idea is still valid. I really like the fact that we got that big break. It retested this breakout level and bounced really nicely. The problem is I don't want it up here, right? I want really good risk reward on a trade like this. So I am trying to wait for this 36 area around the 20-day to start in on this name. I really do want to get a bit better risk reward, but I like this name, I like the sector, and it's really, this whole idea stems from the higher time frame chart, right? This chart looks prime for a reversal, and I think it's going up to this 45 level as the first target, but it's a matter of getting a good entry, right? So I still like this name. MO, I still like this idea. Again, this weekly candle it made looks pretty bullish, but I need a retest of those kinds of areas to get long. Didn't really want to put it on last week with what the market was doing with that gap down and flush out, but hindsight's 2020. I probably should have. Not a big deal. There's always more trades coming, but this one is not really valid yet, right? I think any buying down in these levels is still anticipation of the break of 52.59. Yeah, so it still needs to get over 52.59 for the trade idea to be valid for me. But I would like here we go, guys. So we're already getting these alerts. So the futures have opened, and let's see. Let's go into our daily chart and see what's happening. Yeah, so we basically just hit some of these support levels that we just got done marking, right? We'll see if it comes down and hits this next one. I told you guys that first one was really too close, unless we had gapped up. But again, it was hard not to think that we would get some kind of big gap down with all this stuff happening. So there's your next alert. So again, I'll wake up tomorrow morning and I'll set some new alerts based on whatever happens overnight. But yeah, I mean, we're gapping down. It's down almost 3% already, guys, right? So we'll see what happens. We'll see where we wake up. I wonder if we're actually underneath these 4100s. If so, we'll make plans then, right? The one name I did want to point out, other than the two names from last week's Swing Ideas, was Rivian. I really think that this daily chart could be setting up. I think we're just kind of setting a base here. You can see I have this level marked, right? Over this 40 or 7150 area. That's kind of the trigger. I may look to buy dips on Rivian throughout the week on emotional flushes with that same concept of maybe have a day trade in there and possibly keep a piece on in case we can get that runner over 7150. But that's really it. Is in terms of the ideas. And again, it's going to be a crazy week in the broader market with all of this stuff happening in Russia and Ukraine. I mean, well, it's mostly happening in Ukraine, right? But it's all of Europe is affected by this, and there's no way this doesn't spill over into our markets. Let's see. I'm going to go through the chat real quick. Tabuku says, I find myself trading pre-market, after-market due to my job. I have Thinkorswim, but it doesn't allow trading before 7. For someone with 15 to 20K, which broker do you recommend for pre-aftermarket? You can actually open a Cobra account with less than 30K, but it's an account called Venom, Venom, like the snake venom. That's, that would be where I would go to if you want to be able to trade earlier than that Thinkorswim restriction you have. I have Thinkorswim and I use it for like my kids' college account and also one of my personal longer term accounts. But I didn't realize that it was restricted to after 7 a.m. I'm not sure if anybody else can confirm that in the chat or whatever, but honestly, with my longer term stuff, I don't typically trade it pre-market or post-market, so that's probably why I don't know. I'm going to look through these things. The algos listen to me. No, I doubt that. FTNT. Yogi's saying, you want me to I don't know if he's saying that because he wants me to check it out or not. Good looking chart as far as what we were pointing out with NET and LAC. Looks the same, right? Like pullback, push up, higher low. If we break over this level here, it's probably going to get a move. And I believe the reason Yogi's probably pointing this out is I believe these guys are cybersecurity. Correct me if I'm wrong, right? But that's that sector. And, I don't like the risk reward on a name like this compared to NET because we're so close to the highs. If you look at NET, a trigger over that, we got a lot of meat of move to capture if it is going to go back to the highs. But remember, you could use CrowdStrike the same way. You see the same setup. Again, this one I don't like this setup quite as much, but it is there, right? You still have the low, the push up, the higher low. And again, you can just set alerts, right? A break over these levels and we may get a trigger to go higher. It's the sector that I'm interested in, right? So let me go back to the chat. Yeah. By 20 day, Ricky means 20. Yeah, okay. Anything on Roblox? Roblox looks dead to me. I mean, considering it's trading under its IPO price, that's depending on what you want. Like, I like it short. I think pops into certain levels make great shorts on this name, especially into this 20-day, right? 20-day, if it happens over the next few days, is going to put us right into the highs from February 16th. So I think that would be a good spot to probably fade on a pop. But I don't want, like, again, I don't know why. I guess when people ask me to look at charts, sometimes I just have this assumption that you guys want to know my opinion from the long side. But I don't want to be long a name that looks like this, right? Names I want to long need to be trading at least above their IPO price, or in some form of an uptrend. Yeah, Airbnb was another one that was almost on my short list this week. That's not the kind of move you want to see after those numbers came out. Granted, it's holding this trend line here, right? So that's the one thing Airbnb still has going for it. But I still think pops or fades on this name. Thoughts on AIG 6085 for a long, for a day trade, Javier. I actually looked at this name and I remember I thought it looked interesting. Yeah, this is what I like about. So this is what I would look for something I want to get long, right? This is in an uptrend and it's still making higher highs and higher lows. Now, if I remember, yeah, the thing I worry about is that if you zoom out, let's just look at a weekly chart. We're kind of getting up to these levels. Like this would have been a great long this whole way up. I would have been worried about it as we approached here, 5840s or 5850s, and I'm going to worry about it as we approach here, which is these recent highs over here, right? So you have those levels that we're getting close to, and so first test of those may act as pretty good resistance, but for a day trade, I think this thing's the right kind of candidate, right? It's got a $2 ATR, trades liquid enough. It's trading about 7-8 million shares a day, actually 6 million shares a day. A flush down to what, like the 20-day? I would have to look at it intraday to see what I really like. Let's see. First thing I'm noticing is we keep coming down here and testing and holding. Yeah, that would be the level I'm looking at, 6120. What did you say in yours? 6085, a little bit lower. Yeah, I could see that too, but that's just based off yeah, I mean, they were high, or they were resistance and then turned support here. I think with that 2-point ATR though, it's going to put us right down in this 6120 level would be where I would probably look to play it. I don't know what the 20 days at. Let's see. 6070. Yeah. I still like that 6120 level on that one. Sorry. And again, listen, remember, one of the things I'm very adamant about is anybody can look at a chart and see something different. You just have to know how you would play it and how you manage your risk, because no one should be able to tell you your idea is wrong and my idea is right. That's not how this works. I'm just able to tell you guys the way I see things and how I would trade it, and I know I can manage my risk, so I'll be fine. Tesla, someone's just asking Tesla. I think Tesla got real ugly last week. Let's see. Someone's asking about, well, USO is oil, right? So oil still looks good, but remember what we had just said about it. And like personally, I follow the sector ETF for looking at my oil. You can follow USO. There's a lot of ETFs that are oil ETFs, right? And gold. You know, gold, silver, all those commodities, those metals are going to be probably pretty active this week with the headlines going on in the macro environment, right? So gold looks pretty good, but the one thing I'll tell you is that candle on Thursday is hideous, right? Like obviously caught a wild hair up his ass on commodities headlines. I think if I remember correctly, I think that might have been the day where AA got a bit frisky. No, it wasn't that day on AA, but regardless, that daily candle on Thursday is pretty gnarly. And Friday was a very indecisive little kind of, you know, a nothing candle. Now, granted, gold doesn't typically have a lot of range. It very well may this coming week, but not something I play. Just kind of how I see it when I look at that chart. Thoughts on VICR and HHR? Let's see. Not liquid enough. So first thing I look at is liquidity, right? I pull up HHR and just obviously the last 2 days liquid, right? But I'm assuming there was headlines that caused that. Let's see. Let's see, February 10th. These aren't the headlines that caused this. This may have just been, I'm not familiar with this company. It's an ADR. Oh, it's a European ADR, right? So most likely affected because of what's happening in Europe right now. Yeah, not really going to be interested though, just because average volume on this is next to nothing. And there's no guarantee it's going to have the volume for the coming days either. Let me look at, what was the other one he said? VICR. Yeah, another one with no liquidity, right? Like just nothing there in terms of volume. I can't trade anything. Like personally, guys, I won't ever have anything on my watch that doesn't trade 2 million shares a day, and that's like the bare minimum. I love things that trade well above my minimums. I don't want something trading, even though I say 2 million's the cutoff, I don't even like the things that trade 2 million. So if you guys want my opinion on something that trades less than 2 million shares a day, that's going to be my answer every single time, right? It's not liquid enough. I'll do a few more, guys, and I'm going to call it, but Yogi's asking, he said FTNT on flush to 317. Let's peer into the, let's see here, 317. Again, I probably wouldn't trade this one on the liquidity. It trades 1 million shares a day, Yogi. He knows too. Yogi, you know better. But I see that level. Obviously held pretty well on Friday. I'm not going to get involved on something that's... First of all, another thing I'll point out on FTNT is the ATR is $17 almost, right? And so wanting to buy it 7 or 8 points away from where it closed on Friday might be asking a little, like might be a little too tight. Like this thing could flush down to the 20-day or the quarterly pivot and still be well within its like what is expected of this name. But again, the liquidity is going to keep me out of that name. TN on a pullback to 1750. Did these guys, what was the is it up on the earnings, or was it, when I see these things trade with this really tight range, that just makes me think there's like a buyout or something. Yeah, it's a go private deal. I'm not touching that. Nothing there. You can't, maybe that was a typo. Did you mean to say TEN? Because that's the reason it's trading in that really narrow range, is because there's a buyout or a deal to go private. And it says they agreed to the deal too. Obviously, there's always going to be a margin of error on those things. Things can happen, and that's why I won't trade at the price of the deal. So TEN is a no-go, and ATI says pull back to 24. Average volume, it's enough, but again, I'm not sure I'm going to have a lot of. Again, listen, here's another thing that's important to point out. I'll just kind of end on this, is you could look at almost any chart, right? Like this chart is obviously strong. It's in an uptrend. It is not, it hasn't had, it's been in an uptrend since December, right? So while the market was making its major pullback, this was in an uptrend. So it has that going for it. But like I can find a million charts that are in, not a million. Let's try to keep it a little less hyperbolic, but I can find probably 50, 60 charts of stocks that are in uptrends. And every single one of them I can pull it up and go, oh, I like this name at this level. But you're really kind of making a stretch. And what I would really like is charts that when I look at the chart, I go, oh my God, it's so obvious. Like that is, like I want it to be obvious. And like this one, there's just nothing that really screams at me. The first thing I noticed is all these wicks when it was trying to get above these levels. And so, yeah, we broke above it, but it definitely was struggling with that 24 level, kept not being able to close above it. So like, for whatever reason, I get this feeling that if we retest that 24 level, it's not going to have a lot of that buying power that supports it there. I could very well be wrong. Dude, I'm wrong all the time, and you guys know that. But what matters is when I'm wrong, I'm just wrong quick, and I just bail. Like I just manage my risk, keep my losses small, and I think stock selection is huge. And I really, really think that people could avoid a lot of paper cuts that are unnecessary if they pick better stocks to trade. Look for stocks that are liquid. Look for stocks that have charts that just scream there's a setup here, right? Because everybody can always say, I mean, that's just as part of the stock market is you can always say something could happen, but very rarely can you look at a chart and say something should happen. And the only time you want to put capital at risk is when you say something should happen. And depending on the strategy you trade, that should statement can come in many different forms. I personally am trading emotional moves in the levels, and I know what makes an A+ setup for me. And I know when I look at something, when it makes a move, I can go, that should give me a good reversal from here. And if it doesn't, I know where I'm wrong and I stop out. Or I should buy it here, and it's a should statement versus a could. Stop putting money at risk for could statements. Anybody can throw a dart at any chart and say, oh, I think this might go higher from here. And you could be right. You could be right. Just as easily as you could be wrong. But when something is a should statement, that's when you got the probabilities on your side. And even when something should work, you will still be wrong plenty of the time. So knowing that you're going to be wrong plenty of the time, even when something should happen, good Lord, that makes it so much more obvious why you need to stay away from all the could statements. So hopefully that makes a lot of sense. I hope you guys take a lot of value away from these Sunday preps, guys. I love hanging out with you, but I think we always drag these on a little bit longer than they need to go. I will see you guys all bright and early tomorrow morning. Dude, send thoughts and prayers. Do what you can for Ukraine. I just can't stop thinking about the people there and what they're going through. It's unfortunate. Hopefully this gets resolved in a diplomatic way. I don't know, man, but send you off with this, guys. Remember, there's much more important things than money in the stock market. There's real life out there. So make sure you guys hug your family, tell your friends how much they mean to you, and focus on the things that matter. Stay safe.